Today, I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made 71% win rate within a short period of time. It was backtested 200 times. And it is very easy to understand. I recently discovered the strategy as it uses just 2 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000, with a 1.5 risk-reward ratio. Please make sure to hit the like button and subscribe, as it really helps the channel. Okay guys, so for today's strategy, we will be looking at the United States dollar, Japanese yen, and we are on the 5 minutes time frame. So for today's strategy, we will be using the 2 top indicators on TradingView for a very long time. Thanks to Lazy Bear and Chris Moody, I was thrilled at how both indicators did perform. To give the best possible entry with a low risk high reward win ratio, this strategy was tested on different major pairs and it yielded good return rate. So let's quickly add the indicators to our chart. For the indicators, bring up your indicator panel, click on Community Script, make sure it's doing top indicators, then add this first 2 indicators by Lazy Bear and Chris Moody. Let me briefly explain why we're using these 2 indicators for this strategy. Now for the squeeze momentum, according to Lazy Bear, he noted that this is a derivative of John Carter's TTM squeeze volatility indicator, as discussed in his book, Mastering the Trade. You can check that out later, but for now, we would be using the indicator in a different pattern to filter our trades. And for the MACD by Chris Moody, he noted that this indicator has all features, as it is an extremely popular indicator used in technical analysis. MACD can be used to identify aspects of a security's overall trend. Most notably, these aspects are momentum, as well as trend direction and duration. What makes MACD so informative is that it is actually the combination of 2 different types of indicators. So the mode of calculation for this indicator is what we will be using for our strategy. Now let's quickly adjust the settings, and please note that this strategy works best when we are on trend, but let that not bother you. We also take profits when it's ranging, and the RR ratio would cover some of the losses made on ranging markets. Now, we know that both indicators on the chart are from the best 2 wizards on TradingView, and for this strategy, we will be using their indicators in a totally different way from what was scripted, because we take advantage of how these indicators calculate its values. Let's quickly double-click on the squeeze to adjust its settings. On the style, I want you to change all these plot to white, increase its opacity, then make sure they are on the second thickness for better visualization. After that, also change the both of these plots to lines, and when you are done, press the OK button to fully apply the settings on the indicator. Now for the MACD, double-click on the indicator. On the style, I want you to untick the MACD, then on the histogram, change color 1 to pink and color 3 to blue, and don't forget to increase the opacity for all, then untick the cross and we are done. Don't forget to click on the OK button to fully apply the settings. Now as we look on the chart, our main indicator is the MACD, as this yellow moving average is our signal MA, and it would be confirming the general trend in the market, as when it is above the line, it is showing we are in a bullish trend, as when it is below the 0 line, it shows that we are on a bearish trend. Now the histogram on the indicator will be serving as our entry, for either the buy trade or for the sell trade, as the green histogram shows strong buying power, the pink shows possible sellers taking position in the market, whereas the red shows strong selling power, while the blue shows possible buyers taking position in the market. And for the squeeze momentum, we will be using it as our 0 crossover line, and it did a great job at hunting possible market bottoms and tops in an ongoing bullish and bearish trend that would enable us take position at the best point for entry on our chart. Why we take time to briefly explain all this is so you would really understand why we do what we do. Now we have our chart looking like this, so let's quickly go through the conditions for a valid buy and sell signal. For a buy signal to be valid, we would want to see the yellow moving average on the MACD be above the 0 line as our first confirmation. When this happens, we would want to wait till we see the squeeze momentum moving average close below the 0 line, while the MACD yellow moving average is still above the 0 line. Then we would enter a buy trade when we see a blue histogram on the MACD from the point A. So here, we see we have the yellow moving average above the 0 line, and we can see that from the point at which we had our squeeze momentum cross below the 0 line, we still had a red histogram on the MACD, so we had to wait till we got the first blue histogram at this point. We then go ahead to place a buy stop order at the peak of this trigger candlestick, and we can notice that the trade did not open at the next candle as we can see, but was triggered at this candlestick. Our stop loss is at the recent swing low, while our take profit level is at 1.8 times the risk, and we can see that it was a successful trade. Please note that before we take another buy trade, the squeeze momentum must have closed above the zero line before we hunt for other possible entries. Note that, we won't be taking any trades if when some of the conditions are met, but when we get our blue histogram, the yellow moving average closes below the zero line, we will then skip such entry. As we see here, we got the squeeze momentum below the zero line at this point, and the MACD had the histogram on red. As we noticed that when we got this blue histogram, the yellow moving average crossed and closed below the zero line, showing a change in the ongoing trend. We would not be buying from that candlestick as the entry turned invalid. And note also that exactly the opposite is the same for a sell trade. Now let's quickly go through the conditions for a sell trade. Exactly the opposite is true for a sell trade. For a sell trade to be valid, we would want to see the yellow moving average on the MACD below the zero line as our first confirmation. When this happens, we would want to wait till we see the squeeze momentum moving average close above the zero line, while the MACD yellow moving average is still below the zero line. Then we would enter a sell trade when we see a pink histogram on the MACD from the point at which the squeeze momentum closed above the zero line. So here, we see we have the yellow moving average below the zero line, and we can see that from the point at which we had our squeeze momentum cross above the zero line, we still had a green histogram on the MACD, so we had to wait till we got the first pink histogram at this point. We then go ahead to place a sell stop order at the bottom of this trigger candlestick. Notice how we take trades at the point at which we don't have to risk much in the market to achieve all these. Our stop loss is at the recent swing high, while our take profit level is at 1.8 times the risk, and we can see that it was a successful trade. Now let's go over one more example in the video before we backtest our strategy. So here is a buy trade we would have taken. As we see, we have all our conditions met, as the yellow moving average is above the zero line, and we had our squeeze momentum close below the zero line at this point. We would go ahead and place a buy stop at this blue histogram, as our strategy conditions are met. Stop loss and take profits remain the same. Now also notice that at this point, we had price close above before closing below the zero line. Also we got our entry signal at this point, so we would be taking this trade as well. And we could see it was successful too. Now this of a trade was not actually successful, as we would experience some loss while using this strategy, but the long-term profit is actually something you should look forward to, as this strategy could also get you that funded trading account. So let's quickly backtest our strategy with an account size of $1,000, and we would be covering 200 trades, as we risk 1% of our capital on each trade. Let's jump into it. So we just finished the back testing for this strategy, and we can see that the results are amazing. We had a win rate of 71% in 200 back tested trades, having won 142 trades and lost 58, which made us 197% return on investment, and I found those wonderful trade setups within 8 months. Although commissions and spread fees would eat up some of the profit in real trading, because it was not included in the back test, so you definitely want to expect that number to be lower when trading light. The profit factor for this strategy is looking good, I guess, and we had 6 wins in a row against 5 losses in a row. So yeah, I'm definitely happy with these results. Okay traders, that's it for today. Thanks for watching, and see you in the next one.